2, 1. Hey, what's up? Happy Thirsty Thursday, people, and I want you to be thirsty for some opportunity out there. We're live with our man Pete Covino. We had Ace and Hansen on the other day. We were talking about some things that chiropractors need to be thinking about so they don't have to be adjusting into their 80s and 90s anymore. But we had some breaking news this week, and I told you guys we're going to have this team from Legacy Wealth on to help us, navigate through some of the stuff that they know more about and guide us and give us some resources. The big news this week was the biggest Dow drop in the history. I think it was the biggest one-day drop. So is it time to impeach Trump, my friend?
No, I don't think that there's an issue of concern there, really. I don't think he has a lot to do with the markets, although he does pat himself on the back when they go up. I've noticed that, but and he kind of hides and keeps quiet when they go down. But reality is, tax policy certainly can have a bearing on the markets, and he's affected some of that. But for the most part, there's a lot of other things at play.
So I titled this dude is stoked, because offline you're going, dude, I'm excited when this stuff happens. That means there's opportunity, and we're different organization than others. So tell me, would other wealth advisors, and there is other legacy wealth advisors, so just so you guys know, the link that I have above is the only one that we vet. Is there other wealth advisors that freak out at these points in times when this stuff happens?
Yeah, like during the '08 market crash, we talked about guys jumping out of their windows and so forth and panicking. You manage people's money, and there's a sacred duty with that. And if you're invested in the stock markets, there's going to be crazy times. So, yeah, the Great Depression is historical for, suicides and panics, and people don't know what to do. But
okay, so what makes you guys? Are you eating the Tide Pods, or what makes you guys different?
I think early on in my career, and this is sort of the mantra for our whole organization when we manage clients' money, it's really a function of managing risk. And so, there's inherent risks with any type of investment. Some people hide in CDs and in the bank accounts because they're afraid to take risks, but there's risks associated with that, right? I mean, we call that going broke safely, because you have interest rate risk and inflation risk and all these other factors. So the typical investor just thinks, I'm investing in the stock market, therefore I'm just going to have to go up when it goes up and down when it goes down. But that's not necessarily true. There's a lot of ways to structure your portfolio. There's a lot of different types of investments that you can get attractive returns in that can accomplish one's goals without, feeling like you got to be on the roller coaster ride.
For chiropractors, we were talking offline, we're known as, and I can say this because I grew up the chiro kid and third generation soon to be chiro. We're a little different. We're unique. You were at Cal Jam, and that people talk about not injecting in vaccines. Was there something that where does that tie in with you guys and this Dow drop?
So wait, what are you asking me?
Oh, where does it tie? Was there something with the Dow drop that chiropractors themselves should be excited about? Like, what are the opportunities? Okay. Because we are the rebels. So, being associated with people like you that say, ride it through.
Right.
What are the opportunities that we're seeing? Sorry, I wasn't clear on that. That's the first time ever. I don't think I've ever been clear on a question. So you guys.
I think you were clear. We were talking about this again before we started the live. Yeah, no, I mean, they're rebels. They swim upstream in a lot of ways, but at the end of the day, does that mean their message is wrong? And I think we have sort of a similar message, and it's one of the reasons why we gravitate towards the chiropractors so much in our industry, is because we really like the way that they're not afraid to wear that on their sleeves and to really question the status quo. And so we do the same thing, but it's really it is an opportunity. When the markets are going down, it just means that there's opportunities out there. Let me be specific of what I'm talking about there. The chiropractor community doesn't really, for the most part, doesn't really trust what a lot of what's going on. And again, you can see that with the way the Food and Drug Administration and other aspects of their world. But they also have that kind of carryover into Wall Street and into government. And so there's so many. The big boys are in our lives so much, and it's daunting and frustrating. And so there's a lack of trust inevitably anyway, if you follow what I'm saying. So then So then they say, well, how can I invest and again prepare for retirement so I'm not adjusting into my 80s? What kind of strategies can I implement where I don't have to go through an '08 market crash where the market will get cut in half, meaning my portfolio is cut in half, and now it takes 6 or 7 years just to get back to where I was.
Yeah.
And so many of them experience that, and that's assuming you wrote it out. And the problem is we're all emotional creatures, and so we don't write it out. The market starts dropping. It gets down to this point where we can't take the pain, the threshold anymore, and we get out of the market. And then we miss the bounce. We miss the first 20% of recovery. And then we think, well, we missed that, so it's probably going to pull back again. And all of a sudden, it's just this mess. And so we've developed strategies that allow them to feel comfortable to ride these things out without seeing the volatility. In other words, translated, our clients didn't see a 50% drop in 2008. And furthermore, during the tech bubble, they didn't see a 78% drop when the NASDAQ crashed. And so, how we do that is really our story. And we can maybe cover that a little bit.
Yeah,
but again,
let's dive into that.
Yeah. Okay, let's dive into that. So one of the basic strategies is just simply avoid the stock market altogether. There's all kinds of ways to make money. We've seen we make money on loaning money. So if you've got a company and you're a growing company and maybe Cairo Sushi needs a $50,000 capital infusement to expand what they're doing, and the opportunity is very attractive, and they've got assets to back it up. We can come in there and say,
"Hey, to pay a couple of the speakers that are coming."
Okay, I'm looking forward to that. By the way,
yeah.
I heard JP Spears is going to be there.
Yeah.
Yeah, awesome. So we'd say, okay, our investors would pull together their money and say, hey, we're going to loan you $50,000. And so this is just a real small example of how we might do this. And then we sit there and we make some rules associated with that loan. We create a document. We create covenants by which you will adhere to the rules of that loan. You're going to pay us an interest rate. Now, since you're growing and doing very well with your business, you're willing to pay us an attractive return, say 10 or 12%. And you're also willing to secure
we're talking equity?
No, 10% on a debt.
Oh, okay,
I'm talking about, yeah. I'm saying, so we would loan you money. But sometimes you bring up equity. Sometimes we might say, okay.
We might do a convertible note, right?
We might do a warrant, which says you'll give us stock at a certain price that if your company grows the way that you anticipate it will, we have stock ownership. But the bottom line investment is just a loan that we made to you that you pay back over, say, a 2 or 3 or 4 year period. We tie that loan to the interest rate market so that we don't have interest rate risks. In fact, right now, we expect interest rates will continue to rise slowly. And so if I loaned you a $50,000 at 10%, let's say, but we had a floor or a base of 2.5%. Maybe it was tied to the 10-year Treasury or something, and that started to go up 0.25%, 0.5%, 1%. Well, your interest rate to us would go up as well, so we don't have interest rate risk. And so if everything works out, we get paid back. We don't have to go through a default or a foreclosure process and take the asset that you tied up as collateral, and your company does well, and we get a little bit of equity, and so our clients end up with a 10, 12, 14% return on that small loan. Without any stock market exposure.
I love this, dude, and I'm hoping people are enjoying this out here because this is really in depth. I want to ask you about, you said, okay, one of the opportunities is staying away from the stock market like that. What are the opportunities for you and for me, a chiropractor coming out to become? Are you helping them become angel investors, say, in certain start? Is that a game now that's actually viable? Are you crowdsourcing funding with your own portfolios? To walk me, is that a channel you guys can turn on and view?
We can, but I'll tell you that we don't typically go that direction. Again, we're looking at a risk off and a risk on investment strategy. It's a great opportunity for wealthy people to make a lot of money, but typically someone who's trying to accumulate wealth or saving 20, 30, 50, 100 grand a year.
Too big of a risk.
Right. Then what do they, so can I really afford? And typically when you're throwing money at those sort of opportunities, you really, really want to understand the anatomy of a deal. I mean, you really want to understand how you're investing your money, how much control you have. I mean, the show Shark Tank is obviously entertaining and fun to watch, and there's all kinds of opportunities out there. But the one thing I've seen so many guys do is when they have a little bit of money, everybody starts to hear about it. They approach these guys and they say, hey, can I borrow money for my new idea that I have? We're going to convert water into vodka, and it's really going to change the way that And so come invest with me. And the idea sounds great. We loan them $100,000 and we never see it again, and that happens so frequently. So again, there's all kinds of opportunities. We do get involved, but in a very cautious manner and a very structured manner and a very safe manner. Again, using collateralization and things like that.
Then I'm assuming the second option or one of the other options, because you're exploring all options, is to play a part of the DAO, and that was the genesis of this conversation. And you were talking about the ups and downs of it. What are you looking to point your clients or a chiropractic client in with the DAO? Because again, we've talked. We don't want to invest in Well, I'll say the majority don't want to invest in pharmaceuticals. I'm not going to lie that I believe in the 80s there were a lot of people that said they didn't invest in the pharmaceuticals, but I believe they did.
Right. Well, and there's been a lot of money made in biotechs, and there's no doubt those companies are part of the thing that's controlling. They're pulling a lot of strings at the government level. I mean, there's a lot of money to be made there.
Oil, you could legitimately point that back to pharmaceuticals, right? Yeah.
Yeah, to some degree. And by the way, you bring up oil. Let me give you one example of another way to kind of stay out of the market. In fact, when we were at CalJam, we took a group of doctors out to dinner to show them an investment idea that we put millions of dollars into. And it's really a small firm, but they're sort of a networker that aggregates together property and real estate and land that has mineral rights. So they have the ability to go down and explore and drill and take oil out of the ground. And they're going into areas where we have some of the best reserves on the planet. Down in Texas, the Permian Basin. In New Mexico, they're in the San Juan Basin. And, I've invested in these exact same strategies through this exact company over the last 12 years. And, I mean, my clients have had returns in excess of 200% in a very short period of time. And so you say, well, where are the opportunities? That's a huge opportunity. That's a home run. And even if you only expose 4, 5, 6, maybe as high as 10% of a person's portfolio, there's a chance for them to really have a significant increase without putting too much of the rest of the portfolio at risk. What's attractive about this today is we think the markets are high. They're getting a little bit overvalued perhaps, or there's at least a perception out there. And so people are a little nervous. If I start investing in the markets today, this exact thing that happened this week could happen to me. All of a sudden, I put in $100,000 and it's down 80 to 89,000 overnight, and that's why they don't do it. But in this type of investment, there's a different set of circumstances. And so, let me give you an example. We saw oil a couple of years ago drop all the way down into the high 20s. Really, in the 30s is where it settled in. Today we're back up to 60, but it's a lot more stable environment. And what that did, if you remember what was going on in North Dakota, there was this big rush to drill, and everybody was going there. In fact, a drive-through employee at McDonald's was making $21 an hour. I mean, that's unheard of because there was such a demand to take care of all these guys that were operating and drilling and pulling gas out of the earth. Well, when that price tank happened in 16, that became a ghost town overnight. The technology is still there, but what's interesting is we're now in an environment where the costs to drill, because we have all these rigs and all these equipment and all these operators that are sort of out of work because there was a glut of them, and now they're saying, hey, we'll go back to work for a lot less than we were before. So the costs to drill today are as low as we've seen them in my career in 21 years. Well, you don't really read that on the front page of the paper. What that means, though, is that if I do want to drill and operate, I can pull oil out of the ground, for example, in New Mexico, in some of those oil shales. I can pull it out and be profitable at $21 oil. Now, where's oil? It's down from 66 last week to 60 today, but it still is a massive cushion. So how much risk am I taking if I go and invest in oil and gas in that area? Well, it's a low risk proposition. And furthermore, if you think inflation is on the horizon, which a lot of people do, this provides a great hedge to that. And so because of that, in fact, last week, I know we're getting along in the tooth and people are probably bored, but
dude, just keep rolling,
okay.
Dude.
Yeah, but just think about, I'll explain this a little longer. Just last week, right near where this portfolio has about 170,000 acres of mineral rights, okay, which we purchased at a price of $300 an acre. okay, into this partnership. They just sold 105,000 acres near us for 7,000 an acre. So our clients are in there knowing that they paid 300 and that the competition or the comps are showing 7,000.
Right.
Those are the type of returns you can see. And my clients that own that really could care less if the stock market just went into correction territory today at a 10% drop for the year. They really don't even think about it. I have not had one phone call today other than a text I got from a doctor 10 minutes before our call that said, hey, I think the correction's over. Let's buy some long option calls on the S&P 500 tomorrow, which we're going to do.
Yeah, yeah. Dude, you know what I want to take away from this is I know that between you and Asen and other team members at Legacy Wealth, guys, if you want to learn more, the links above. I don't want to say this often, but I think that you guys really like to win, huh?
Oh man, we sit here and salivate on days like today because we do win. I'll tell you a play we made we've gotten into this week a little bit at a time, and today we just bought a bunch more. And Steve, people aren't your typical investor is not even going to know what I'm about to talk about. But we just basically shorted the VIX today, and the VIX is the volatility index, and it's basically a real good measure. You look at the option contracts that are being traded in the stock market, and the VIX is up above 30 today. The price on the VIX is over 30, which it had last year. The VIX set a record for the most record days ever in a year. Probably another thing Donald Trump gave himself credit for. But honestly, we're in a great market. I mean, the markets have been really quiet. They've gone up. We had a real positive year last year. If you were investing in the stock market last year, you're not disappointed in your returns. Your 401k statement probably looks pretty good if your advisor had you invested. And so here we had a spike where the VIX went from 8 to 30. It does not go into that range very often.
Yeah.
And so when we short it, we have a couple of pieces at play there. But this is a position. The last time we did it was Brexit. And then I don't know if you remember, January of 2016 was the worst January on record in the stock market. And, within like a week or 2 weeks, those positions were up 60, 70, 80%. And again, the risk was very minimal. We felt like we had very risk. And we set up what are called call spreads or put spreads, and we set them up so that we're capping our downside loss, so we have very limited exposure. And we do that with our entire portfolio.
Got it. Hey, man,
Yep.
Well, I want your thoughts on Elon Musk.
I love him. I mean, I love cutting edge. I love breaking out of status quo. I mean, the guy's an innovator. I don't know. I mean, if that's what you're asking me, I love him.
Yeah, it's just a general thing. He comes from a line of chiropractors. No, not a lot of people know this, but
Okay.
dude, I appreciate these guys over at Legacy Wealth. I want you to know if you're interested, you can click the link above. You can reach out to Asen Hansen, Pete Covino, or anyone else at the team at Legacy Wealth. Pete and Asen are going to be presenting at the Cairo Sushi Summit. They'll also be there. So if you want to schedule one-on-one time, you want to go out to lunch with them, they're going to be there for you to help you out and point you in the right direction. Anytime that we have something kind of breaking like this or big news, man, I'm going to bring these guys on, so stay aware of that.
Thank you for having me today.
Thanks, brother. Guys, if you want to learn more, click the link above. Thanks so much, Pete. We'll be on with you again soon.
Check you later. Bye.
Thanks.